Hi, and welcome to this week's episode of Tackling Your Taxes, which is a series about income tax returns and some helpful tips along the way when you file your tax returns. This week, I am joined by Low Income Taxpayer Clinic Law Clerk Jake Oberg, and we'll be talking about currently not collectible status. And so let me just go on to a little bit of an overview of what we will cover is what is currently not collectible status and when do you get it? And what does the IRS ask for when you request currently not collectible status? What are the national and local standards that you can use while applying for currently not collectible status? What happens once you get currently not collectible status, and then some helpful resources for you along the way. So I will turn it over now to Jake.
Alrighty, so generally currently not collectible status is something that the IRS can give to a taxpayer, and it halts IRS collection of your tax debt. More specifically, the IRS gives it to you when they determine you are unable to pay reasonable basic living expenses, and that when you would pay the IRS, it would cause an economic hardship. The IRS determines this based on information you give them and based on national and local standard costs, national and local standards for cost of living. When should you request it? Generally, the IRS looks for if your expenses are greater than your income and assets. So, for example, let's say you spend $4,000 a month on rent, utilities, car payments, and so on, and you only make $3,000 a month and you have $100 in your bank account. That would be a good one because they see your income is less than your income and assets combined are less than your monthly expenses. You can request currently not collectible status over the phone by calling the IRS at the number on screen, or if you received a bill or notice from the IRS, it will have a please call the IRS at this number. What information does the IRS ask for? Generally, there are two forms you would use. If you own a business, there's another form, but that's outside the purview of this talk. Generally, they're asking for information regarding your income and expenses. So they're going to ask, how much did you earn in a month? How much money's in your bank accounts or accounts if you have multiple? Do you own a car? How much do you pay in rent? How much do you spend on utilities? So there are the two forms. What's the difference between Form 433A and Form 433F? For the sake of brevity, I'll refer to them as A and F. You'll need to fill out Form A if you owe income tax on your tax return from wages or are self-employed or have more than one source of income. However, you'll fill out Form 433F if you have only one source of income or are told by the IRS to fill out Form F instead of Form A. What do these forms look like? Generally, Form A is a bit more detailed than Form F. I'm not sure if you can fully see on your end the two forms, but here are the examples for personal vehicles. Form A requires more detailed examples, such as the year, make, model, your mileage, and license plate number and identification number. Whereas the Form F only requires year, make, and model and some general information, as opposed to the more detailed, specific information about the car. So we've talked about national standards before. What are they? For both forms, you're allowed to claim up to the national standards for certain expenses without providing any documentation. Generally, this means that even if you have less expenses, you can claim up to the national standard. As you can see right here on the other side away from the text is the current table for food, clothing, and miscellaneous items. So you're able to claim based on your household size up to these amounts without providing documentation. You can always find the most recent national standards on the IRS's website. What are the local standards, though? Local standards are, as opposed to having a general national standard, these are more tied to a specific area you live in, either the metropolitan area or your county. The two major ones are housing costs and transportation costs. Unlike the national standards, the IRS can ask for more information or proof of your expenses, even if you're at or below the standard. You can do this by showing your bank account, or a bank statement withdrawing, for example, rent, or if you receive a receipt for your rent or transportation costs. Unlike the national standards, you can only claim the local standard or your actual expenses, whichever is lower. With the national standards, you can claim the full national standard even if your expenses are lower than it. What if you spend more than the local or national standards? You may still be able to get currently not collectible status if you provide documentation showing why it's a necessary living expense. The easiest example is, let's imagine you have gluten intolerance and you can't eat gluten, and somehow that raises your food expenses above the national standard for food. You can provide documentation showing that your special diet limits what foods you can buy to certain brands that raises your expenses. So here's sort of a live demo on how to find them. These 4 steps generally are what you generally need to do, but we'll provide some examples in the next few pages. So the first thing you're going to do is you're going to go to whatever search engine you like, and you're going to type in collection financial standards. You can include IRS if you want to. Generally speaking, you'll be looking for this IRS government website. Make sure it's the IRS government website and not somewhere else, because those could be out of date. Once you click on that link, it's going to bring you to this page, which shows both national and local standards. This one here is an example. Generally speaking, it will have a paragraph describing what's in each national standard or local standard. And it will have 2 or 3 links that you can then go and see the actual specific standards. You can both click, some of the links take you to a different web page, and then another one gives you a PDF. After clicking a link, you'll see a table. If you don't see the table, just scroll down, it will be there. And it will be the current year's breakdown, and these get updated every year. It also includes, which I did not include this image, it also includes if you have a family over 4 people, it will show how much you should add to the total amount to figure out your national standard. What if you want to find a local standard? It's basically the same process. You're going to go to the same initial website and scroll down till you see a local standard. However, we strongly recommend you do not download the PDF version of the local standards, because it's 129 pages long. So instead, you're going to click on one of the other links, and it's going to give you a list of states and territories. For the sake of this example, we're just going to imagine I clicked Minnesota. It'll then bring up a table which shows for each county in Minnesota what the local standard is for housing, which includes utilities. So let's say I live in Anoka County and I'm the only person. That means my standard is $1,987. So you've called the IRS. They've agreed that your income is less than your expenses, and they've given you currently not collectible status. What happens? It's temporary, so it's just a temporary pause. But while it's active, they won't levy or garnish your wages. However, if the IRS finds that your financial situation is improved and that you can now pay your taxes, they will remove currently not collectible status. While currently not collectible status is active, your taxes do not disappear. There will still be interest and penalties, and you'll still owe on the taxes. And furthermore, the IRS may take your state and federal tax refunds to pay off your debt. And you should continue to file your taxes for future years, as that could be another reason why they would take it away. Here's some helpful resources. These are four web pages that provide more information, 3 from the IRS and 1 from the Taxpayer Advocate Service. The Taxpayer Advocate Service is an independent branch of the IRS that assists taxpayers.
Perfect. Thank you so much, Jake. So that concludes our Tackling Your Taxes. You can check out Emma Malay's Facebook page and YouTube page for more Tackling Your Taxes series episodes. So we had a series of 3 for this summer with 3 of our law clerks in the Low Income Taxpayer Clinic. Our next Tackling Your Taxes episode will be in October as we prepare for the tax filing season beginning in January. And if you have a federal tax issue that you need help with, including requesting the currently not collectible status that we talked about today, you can call Emma Malay's Intake at 612-334-5970, and we'll see if we're able to assist you. So thank you again for watching this episode of Tackling Your Taxes. If you do have any questions, if you're watching the recording of this, you can type in your questions and we'll get back to you as soon as we can, or you can call our intake line. Thank you so much and have a great day.